We have three founders. I'm the only one that's not a founder. And four operators here talking about something that has been probably the largest topic in DTC these last 4 or 5 years, going from this growth mindset to profitability mindset. I know our company can certainly relate to this. After speaking with these three amazing founders, I know they can too. So what we'll do is we'll start with Chris. We'll do introductions. They can kind of tell you about their business, their story, and then we'll kick this thing off. So Chris, take it away.
Thank you, Drew. Hi, everyone. I'm Chris, and I co-founded Koio. We are a high-end footwear brand that combines Italian craftsmanship, modern design, and sustainability. And my co-founder and I started the brand in 2016 during the height of the DTC e-commerce era. At that time, if you wanted to build a DTC brand, you were following a certain formula. And that formula was raising VC money, spending a lot of that money on online marketing to acquire customers, and building a growing team. And ideally, you'd also have an office in Soho. So we did exactly that. And part of it was working. Like, we had a good brand, we were a growing customer base, we had good reviews, but at the same time, we were losing money. We were losing money every month. In late 2022, we hit a ceiling in our revenue. The cost base was still high. At the same time, the DTC market started to change and shift. There was less funding in the market, bigger DTC companies started to fail, and valuations were dropping. So the traditional VC-funded model didn't work anymore, and we needed to really look at ourselves and reinvent ourselves. At the current burn, we maybe had 4 to 6 months left to go. So we looked at each other and had to make some very tough decisions to turn this company around. And what followed was a bunch of hard decisions within restructuring the whole company, like letting go of 70% of our New York team, switching to a remote setup, reducing the marketing team internally by a lot and shifting to a freelance and agency model, cutting a lot of SKUs, cutting a lot of SaaS contracts. I'm sure a lot of people don't like to hear that in here. And now 18 months after this or into this, I can say that it has all worked out. It was a lot of hard decisions, a lot of hard work, but we're now a profitable company. We've managed to keep growth even going a little bit during this time, and are looking excited into the future from a very solid foundation where we don't require outside funding anymore.
That's a really hard intro to beat. Hey everyone, I'm Suze. I'm co-founder of Pattern Brands. So we're a portfolio of 7 brands focused on helping people enjoy daily life at home. We operate as a one team, one cap table model. That means while there's 7 brands, we're working across the 7 brands, allocating different portions of our time. And really for us, we always say, how do you make 1 + 1 = 3? How do you focus on impact, and really how do you look at what's going to get you the most incremental return? For us, that means that there's kind of 3 power brands within those 7 brands that we really focus our time, energy, and effort on. We actually started out, we first fundraised 2018, launched 2019, and thought that we would be incubating brands. So began kind of that incubation process, and then when COVID hit, said, okay, what are we going to do now? And moved into M&A. So a number of the assets in our portfolio have been via M&A and basically asset-based acquisitions. And really why that's important is because we bought typically bootstrapped brands that had actually not done the traditional D2C path, hadn't raised VC funding, and had really built some amazing foundations where they were EBITDA profitable. They were getting acquired for a multiple of that EBITDA, and then our role was to obviously continue to grow not only their revenue, but also the bottom line, as we integrated them into the family. And really our mission for starting Pattern came from previously running our brand agency together. So my co-founders and I ran an agency called Gin Lane that was quite well known in kind of the New York startup scene for working with venture-backed businesses to launch them in market. And so I think we really saw firsthand the fun that you could have with raising venture capital and investing in an amazing Soho-based office and photo shoots, but also that, the ride was going to come to an end, which was really why Pattern, came into existence.
Thank you, Suze. I'm so excited to be here. I'm Alex Schinasi, founder and president of Hulken. Hulken is actually my third company. I've spent the last 10 years building, scaling, and exiting 2 SaaS software startups. I'm probably the only one that went from SaaS to consumer. It's also my first time building a company without VC backing. It's my first time not being blinded by endless amounts of capital to reach growth targets. And with Hulken, we really spent the first 2 years of the business. First of all, it was a side gig. I was running a startup on the side, laser focused on product development, finding product market fit, making sure that we had a product that people wanted. We actually didn't invest a dime in marketing in the first 2 years of founding the company. 2 years in, we started investing in performance, which allowed us to grow more significantly. But it was at a point where we were actually generating revenue already. We were also building a brand over the first 2 years without investing any money in it, just really harnessing the power of UGC and allowing our product to shine with our members, our ambassadors that were just spreading the word. So we kind of flipped it on its head. It's really refreshing to build a brand without the pressure of hitting growth targets from a VC environment. 4 years in, we just closed 2024 at 30 million in turnover, fully profitable, without a single in-house marketing hire. This January, we actually did our first marketing in-house hires, one of which is our Chief Brand Officer that's sitting in the audience. And we're really excited to take it to the next level and hopefully learn from some of you guys on how to take it from 30 to 100. And excited to share my story.
Awesome, amazing. I'm Drew Arciuolo. I'm Vice President of Marketing at VKTRY. Reason I don't have a co-founder title is because it's actually my parents' business. And so about 8-9 years ago, my parents started this idea. It's a carbon fiber insole for athletes. They actually raised some seed money from people that worked in VC. So they had this idea that they were just going to scale it really fast, didn't really care about bottom line. And then we can cut costs later or worry about all of that, the profitable stuff later. And that was, again, the VC mindset Chris was referring to that was so popular. And that was, I came into this DTC world right from college. And so I'm like, okay, this is how business works. You just kind of grow, and then you figure it out later. Fast forward to 2022, the company was beaten up pretty good. And we had a few of the 2 people that were there before me were poached by other companies. It was just myself, our CEO, and a few other people in ops, our controller as well. And we had a couple months of cash left, and you're looking down the barrel, and you're like, whoa, like this got real. I might need to start looking for new jobs. We really just pressed this massive reset button, one that I know these guys, and Chris especially, can relate to, where we're like, let's get profitable. Let's forget growth, forget projections. Let's just start figuring out how to make money. And so we can get to the details later, but fast forward to this year, we should do 8 figures of EBITDA this year after a whole lot of changes, a whole lot of hard decisions, a whole lot of great hires. So this is certainly a topic I can relate to, but I'm also going to be moderating this. I want these guys to also tell their amazing stories and get into the details, tactics that you guys can take home with you, and hopefully mindsets that you can kind of use to help your business grow. So Chris, first let's start with you. I want to talk about how do you approach now this, it's such a gray area, the growth versus profitability, right? Probably depends on how you want, what your goals are personally and what your founder's goals are. How do you balance that? How do you think of growth, especially in the changes you've made? How do you think of growth versus profitability today? What's your approach?
Yeah, thank you, Drew. So originally we started with growth at all costs. Then we had no other choice but profitability at all costs. And now we're in the position where we are obviously thinking about how to grow the company again. And the way we're looking at it is like we're having a budget set aside, a budget for testing purposes to test out new channels, new strategies, and within that budget, we're testing for incrementality and making sure that whatever new marketing initiatives we take on, we try to understand their impact on contribution margin and how much it actually generates for the business. So one example is, in Q4 last year, we did our first direct mail test. And as opposed to going with one of the big companies, sending your catalogs to 100,000 people at once and putting a lot of money into this experiment, because we didn't know if it worked or not, we found a smaller company, it's actually a sponsor of today, Postpilot, to run a small test where we could send a leaflet to 5,000 households. So we tested that. We created a holdout group within our email customer list that didn't receive the catalog, and we created a list that received the catalog, and then we looked at how much was the uplift in revenue, how much was the uplift in gross margin, and how much was the uplift in contribution margin. So we could see that this experiment was actually profitable, and once we had that, we could double down on it. So as opposed to just like risking it all, putting it all in like one big basket, we've broken it down into smaller experiments and are being really careful in measuring their impact on contribution margin.
So don't kill me, I'm gonna go off script here. We didn't talk about this question, but on that, and this is for all three of you, how do you guys measure when an order is profitable? Is there a KPI? Is there a software you use? Is there an incrementality test, MMM? Is there some tactic you guys use to measure whether your next order is profitable or not?
Oh, I mean, there's so many things. So, I mean, a lot of it is still very manual. We do a lot of spreadsheets, but that said, we are really passionate about mixed media modeling. Like, that is very important to really tell us, okay, where are we spending the next kind of dollar to get us the greatest return? To me, though, I mean, obviously it allows you to see the halo effect. That said, we don't want to rely on the halo effect in order for a channel to be like first purchase profitable. And so again, I think within our team, we try and be really, really transparent about all of the numbers. Every Monday, I hold what we call a pattern pulse. We talk about what happened the prior week with every member of our company, down to the last CX agent. And I think that's really important so that people really understand what are the gross margins that we're working with, what's our net revenue, what's our demand revenue. From the marketing perspective, we base everything on the demand revenue, just knowing that net can obviously fluctuate. And then from a mixed media modeling standpoint, we've kind of RFQ'd them all, we've tried a few. The ones that we went with and do highly recommend are Prescient AI. They're running their algorithms and models every day. They're able to go down to the campaign level. It's been really, really impressive to see. And I think, I mean, again, whether you invest in mixed media modeling or whether you're at an earlier stage where you're literally just kind of looking in platform, like there's such a breadth there. But I think being incredibly data-driven is critical as we look at how does this flow through and how do we make really informed decisions.
And so on that note, talking about marketing is one thing, but a lot of founders here and operators here can probably relate to what's my next hire, and what people do I need to bring in to help fuel growth, but also fuel profitability, because now you're committing to a salary. What do you guys have any advice on key hires you've made in the past to help fuel growth and profitability?
So I mentioned before that we actually didn't have in-house marketing hires until last month. We grew Hulken entirely through freelance teams. And that was something completely new for me. I've always, again, raised money, we're under the expectation of hiring these big teams, especially on the marketing side. But we actually had dedicated marketing teams for everything, dedicated SEO teams, email marketing teams, social media teams. And the flexibility that gives you as a founder is just incredible, because these teams are working for you. And if it's not working, we're all incentivized to make this a success. We're all aligned on what that means. And we didn't actually feel that gap or that need to have in-house hires until very recently. I mean, we didn't even design our website until November last year, when we were close to 30 million in revenue. So I'm just saying there are a lot of assumptions in our space that you need to spend to grow, but you don't actually need to do that. Like, it's never been easier to build a brand, to build a website, to create even branding assets on Canva for very, very cheap. So my recommendation is obviously try to look for freelance teams that empower your team, that are aligned with your goals, and hire smart. Be smart and hire right.
I agree with that. I mean, I think it's almost to the point of like let go of expectation. Like, I think so many of us go in also thinking, here's what a traditional marketing team looks like, here's what a traditional org structure looks like, here's how I'm checking the boxes. Throw all of that out the window. Like, we made so many mistakes in the early days where honestly we overhired, we wanted to have the best, the names that had been at all the things. And the reality was that it meant that they were actually doing the playbook that had been done before and wasn't what we were trying to build. One of the best things that we did was also realize that in a remote first environment, we could go global. Like, that was something that as I was diligencing a lot of these potential targets, I kept noticing was that they had these incredible global teams and they were really taking the time to find the best talent, but not necessarily be in the bubble of New York or the US. And so really something that, I'm a big believer in is throw traditional org chart out the window and really think about what you need for your business and what is going to give you the most return. Don't focus necessarily on just full-time resources. Our kind of team at Pattern is very lean. In the US, we probably have 25 individuals, and really the bulk of our team is really now global, and also agency and freelance partners. Our entire lifecycle division is managed by an agency outside of Ireland.
Yeah, you're making a good point, Suze. And I remember us actually talking 2 years ago when we started our restructuring, when we still had our Soho office, we still had a ton of employees in there. And we were debating what's next. How can we get this company to profitability, or how can we make sure that the company survives? And during the time, Suze was suggesting and helping with her advice to look at these companies that hire global talent, where you can hire talent at a fraction of the cost that you would pay New York talent, and have a much more flexible remote setup. It was scary because there were a lot of people in your office that you knew very well personally that have given up a lot of their life also to work for your company. You've become friendly with them. But the way was somewhat inevitable. And once we started making cuts, we saw that it was in a way like freeing, in the sense that like you didn't have that much monthly pressure in terms of cost. You could quickly add new people, train them, see that these talents were all very good. You could train them very well. They could get up to speed quickly and do a fantastic job as well in this regard. So while it was scary initially to make that step, once you were doing it, you could quickly see the benefits of it. And right now I can't imagine the old setup anymore. I think I'm very glad for having this like very flexible setup where we are global. Everyone is remote. We have people in South Africa, in Brazil, Chile, Turkey, Ukraine, and we're all working together every day. So that's great. And then one note I had to Alex's point about not building a team and organically growing the business. So I think that also depends a little bit on which industry you're in, right? I think Alex has a very unique, super differentiated product where the virality of the product helps her grow the brand. For us, we are in the footwear market, and the footwear market is a super crowded space. It's really hard to grow a brand there. It's really hard to stand out. So we naturally fell into thinking, well, we need better people. We need certain things in order to grow faster. And I think it depends a little bit on the industry that you're in. And I'm glad that we went through this experience, but ultimately I think you need to do what's right, what feels right for your company, what feels right for your level of growth and what you can afford.
Two other quick thoughts. One is you can't buy your way to product market fit. Like that's if your product isn't where, and again, we have to be customer first, and we have to be obsessed with our customer and understand our customer, and then be obsessed with our product. Again, if we're in the D2C space, we're all creating product, and our job is to sell that product to the customer, but we want them coming back again and again. So like, don't try and think that you can just throw money in product market fit will happen. It doesn't, and it's the quickest way to like burn money. And then the second thing I'll say is, one area I actually do think is worth investing in, though it's global talent for us, and I think, you know, is where you should go, is like business intelligence and like really having an analyst that you can pair with anyone in your team, because it just makes you so much quicker and so much smarter. And the quicker we can get to insights, the quicker we can act on them, and that's the quicker that we can then be more successful.
It's funny you mentioned kind of that it's almost a trap, Chris, of traditional business practice. And that leads to, you're in that trap, and I think what would have ended your business is you not making a hard decision. You know, letting people go is a hard decision. Do you guys feel like there are other traps that we haven't spoken about that maybe people here can relate to, that maybe they're in? I know we were in one, you know, just for our story, we were in a trap of focusing on growth, making people who weren't in the day-to-day happy, investors, right? And making the brand look good to external people, but maybe internally you're trying to hold this thing together with stitches. Are there traps that you guys maybe, it doesn't even have to be something you personally have gone through, but maybe you see out there in this landscape that you want to double click on?
Yeah, for me, I think I mentioned that briefly before, but I think a lot of brands, regardless of the industry, invest heavily in branding very early on and will go to these fancy New York City branding agencies and spend hundreds of thousands of dollars on brand before even having product market fit, right? So I see that mistake a lot across early stage founders. Same with website creation and polished assets and photo shoot. And especially in the consumer space, we're under this illusion that we need to have these big, fancy marketing assets, when in fact, I think a lot of data shows that very authentic, kind of on-the-go type of content performs much better across platforms. Not to say that we haven't done fancy shoots. We actually just did our biggest shoot ever in the last quarter with New York City Ballet, which was incredible and totally worth every penny. But you know, it took us a long time to get there. I don't think we ever would have considered anything remotely close to that in our early days. So I think just make sure your product resonates. Make sure that, like Suze said, you can't buy your way into product market fit. Make sure the product is something that people want, and harness that and give that in the hands of people that will create content for you and that will create that brand voice that resonates not just with themselves, but with a broader audience.
I completely agree. And that's coming from someone that used to run a brand agency. Again, back in the day, I would look at you with a straight face and say, absolutely, this is $125,000, plus I'll take some equity in you. And now I go, what were we thinking? And whenever I talk to founders, I say, like, how do we do this as scrappily as possible? Like, let's go and give ourselves a budget of a couple of $1,000s. And again, there's so many activities where you can kind of DIY it yourself and get so much of the way there. And then it's almost like you can give yourself a little present every time you do better. But you can also build your brand as you know more. Again, like at the outset, you don't know everything and you need to get to know your customer. You need to evolve your product and you can continue to iterate and grow. And a great brand is like a human. You should iterate and grow. What you start out with shouldn't be necessarily what you end out with, but the DNA should still be there. The other trap, though, that I think people fall into is being so hyper-focused on profitability that you forget about growing your customer file. And I think that's something where, right, we can all like optimize our way where we're then not actually growing our customer file and we're just like seeing in the short term great profitability, we're seeing great retention, but we still need to grow. And so I think that's kind of the balance here of make sure you are looking at the growth of your customer file on a weekly basis. Make sure you're still, if your NCAC is good, like make sure you're leaning into that and really continuing to grow, because that also has compounding effects over the course of the year. So I'd say don't fall into that trap of profitability and kind of not then looking at the customer file itself.
And I would say that expanding your product portfolio too fast is another trap that we've learned the hard way again. We started out doing dress sneakers for men, shoes that they could wear to the office, that they can wear for dinner, and then as we got investors on board, new investors had new ideas, wanted us to expand. So we followed that advice, and we quickly expanded into boots, into loafers, into pool slides. Then we did the same for women. We created a whole new market for women's boots, women's loafers, women's dress shoes. And all of a sudden, we had a lot of dollars tied up in a lot of inventory and different products. And it was bad because that money was tied up in inventory, but it was also bad because you didn't send a clear message anymore in your marketing anymore. Your customers didn't know what you were known for, what was your true DNA. You also needed to promote all these different product launches. So as part of our reset in the last 2 years, we interviewed 150 to 200 customers. My co-founder and I spoke with them like on the phone for like 30 to 60 minutes each to really understand why customers come to Koio and what they love about us. And then we went back to that DNA of creating the perfect dress sneaker for the working professional male that they can wear and that accompanies them throughout their entire day. So we started cutting a lot of these additional products again, which was a hard decision because we just spent all that money getting known for new product categories. But ultimately it was right. It led to much cleaner inventory, faster inventory turnover, more sharp storytelling, and a lot higher efficiency in marketing.
We're gonna have a few questions. I just asked that you wait for the microphone to come to you so we can all hear you. Does anybody want to get started? Ooh, okay, all right. I have my mic runner. I don't know where he is. Here you go. You guys can just pass it.
Okay. Hi guys, my name's Emma. I'm the founder of Praise, a boutique affiliate PR agency. And I'm curious, with profitability, PR is usually a channel that is really hard to determine the return on. Usually your CFOs want to cut it first, right? So I'm wondering how you guys are thinking of PR specifically with profitability and in 2025 media landscape.
May I actually answer? I'm a big believer in PR, but I'm a big believer in PR at the right cost. So we've had PR from day one, and it has really helped us grow our brand. Like when we first started the brand, my co-founder and I were really hustling, meeting editors. It was a little bit of a different world back then. They were more receptive to DTC ideas, and we got great stories, GQ, Vogue, and whatnot. And over the time, we started working with many different big PR agencies, which would give us good pieces, but they were fewer and more costly. And now in our setup, we have a PR freelancer who has started her own agency. It's a fraction of the cost of a big PR firm, and she still has that hustler mentality that she's really trying to go above and beyond for you. So for us, that's kind of a really good setup.
We've always invested in PR in my past startups, and honestly, it's never really contributed to revenue, which is why with Hulken, we actually never invested in PR. But again, because we were so laser focused on the product market fit and the quality of the product and its virality, we actually landed every single press outlet out there. We were on TV multiple times. I'm going on Good Morning America next week. All of this is just through the quality of the product. And the main reason being because I couldn't quantify that investment. And it is costly. And so you mentioned affiliate PR. And so I do think that's the channel that if you had to invest in PR, that I would double dap on, because that's actually quantifiable, and that's one that we can invest in and see ROI.
Wonderful. I know we have another question up front. He's going to bring you the mic, the new mic, right up here in the green blazer, which I love, by the way. That color's awesome.
Okay, we talked a lot about international team building. What are your favorite resources for sourcing talent abroad?
A couple of things. So I think when you're starting out, it can be really helpful to work with kind of an agency to do so. Like that was something where for the first year of us doing that, I interviewed a lot. Talk to me afterwards, hit me up. I'm happy to share my knowledge. There's some that I highly recommend, and then there's some where I'm like, that markup is wild, and that buyout cost is absolutely unacceptable. So be very careful in who you work with. But I do think that that's a great place to start, where the folks we work with, we know we're paying about a 30% markup, but it gives me an opportunity to really understand and like flex up and down. And then I'll typically buy out the contract for about a month of their salary at the end of that year so that I can have a direct hire and do it through deal. These days, though, we feel very confident in kind of global hiring. So if you're hiring out of the Philippines, onlinejobs.ph, just it's the easiest place to go, and you're able to get some really amazing like VAs and resources there. And then LinkedIn, like LinkedIn job posts in most countries work like a dream. And so it isn't that different to hiring within the US. And I will say just also make sure you stay as focused on the hiring process as you would for any other role, and be really focused on onboarding as well.
All right, wonderful. Another question right there in the back.
Thanks. First of all, thank you all so much for your insights. My name is Zach. I'm here with Google. And I was just curious, at least in my experience, I've noticed that at a certain point, even if you are like really profitable, really lean, at a certain point you hit a breaking point, right? It's different for every brand. Sometimes it's 2 million per head, sometimes it's 5, sometimes it's a different number. How do you, in your experience, determine what that breaking point is where you're like, I need to hire somebody, and then deciding between either outsource or insource, like hiring in-house, and then, how do you determine the efficacy of those hires, like your ROI on headcount? That'd be interesting to hear about.
That's a great question. Honestly, there is no perfect formula that we've found. We have like a rough guidance of where we think, but a lot of it is going and also based on the feeling of, oh, this is about to break. And I think also it's, for me, it's how do you make sure you're extracting the most value? That doesn't mean that you should always be, not spending. It means you should be, spending to be able to drive value in your business. I think then we always assume that we're going either global or external to start, and we almost have to have our team members justify why it shouldn't be either a global team member or a more flexible freelance or agency resource. I also think if it's a newer area for your business, I would always much rather have agility where I can immediately pull the ripcord, which is why I would almost prefer to work with an agency in the short term or prefer to work with a freelancer in the short term, where I can really prove out that there is value here and then justify making the investment internally if it makes sense to do so.
And look at your P&L. For us to justify these 2 recent hires, we had to look at the goals for 2025 and justifying what is that revenue goal we need to hit and that net profit, most importantly, in order to justify hiring these 2 hires. So really focusing on the numbers and understanding where you're going and if you can justify growing your team. And I think what Sue said is very smart. Just first prove out the necessity of this role through freelance teams, and then if you can validate that, move forward.
Wonderful. Unfortunately, that's all the time we have for questions, but thank you. Let's give a big round of applause to our panelists. Such great information. Thank you guys so much. All right, so we're going to move into what most people find the most valuable part of these events, our curated roundtables. So you guys have all been curated into groups of about 10. And you guys will find these rooms back by where you guys had breakfast and coffee. So there'll be people to direct you. But we put you guys together based on your industries and interests. So we really want you guys to be able to take away some actionable things you can implement now and today, immediately in your business. So let's get to it. You guys can all head over there now. And I will see you guys back. Please make sure you take all your belongings because we will be resetting these rooms.